We have Stephen Caweizell in the room.
Stephen Caweizell. Stephen, can you hear me?
It's Caweizell, and I can hear you. Can you hear
Caweizell.
me?
Yeah, we can. Why don't you go ahead and get your PowerPoint up there, and I will make the introduction.
I'm ready to go, but it says I
Okay.
can't share my screen.
Okay, you will in a second. Kate, you want to get them set up?
Yep, John, do you
Stephen bought his first stock at the age of 14, and the rest was history. He lives in the small working class town of Russellville, Kansas, with his wife and two kids. Stephen has a background in economics and finance and worked for one of the largest investment firms in the US for 6 years. He has established the Traders Plan as a distinctively unique ETF and growth stock newsletter that focuses on trends in the market indices. Being a former financial advisor at a large broker dealer and watching portfolios crash in 2008 forced Stephen to abandon buy and hold and create a simple three-step trading system that anyone can follow. So I see your PowerPoint up here. You have until 5 minutes before the hour, and then we will start giving away the last of our $100,000 in prizes for today. So, Stephen, you have the floor, and I shall mute myself. And welcome to the Mad Hedge Traders and Investors Summit.
Absolutely. I really appreciate that intro, and it's good to be back. I think this is my fourth or fifth time over the last 2 years, so I'm always excited to be back with the Mad Hedge family. Just so everybody knows, my name is Stephen Caweizell with thetradersplan.com. I appreciate everyone being here. Before we get started, I really wanted to do the courtesy of letting you know what I'm about to discuss and who I've built this for. Now, as the title suggests, how to build a rules-based profit plan. And I'm going to teach you how to do that. And it only literally takes 20 minutes per week once it's in place. Now, I treat trading like a business, and so do the majority of the people that I work with. Now, if growing your wealth is truly important to you and crushing your retirement goals, then I've built this for you. Now, this process works. In addition, I personally make sure that everyone who works with me knows how to execute them. Bottom line, I make money from this process. So do my friends, my family, my students. They all earn income with me. So without further ado, please shut off all distractions in the next 45, 50 minutes or so. I'm going to try to leave a little bit of room for Q&A. I'm going to give you a strategy that serves as a foundation and key earner in my own business, because make no mistake, if you're going to be truly successful, then we've got to treat trading like a business. So let's get started with a quote from the man himself, Ben Franklin. Now, this is just a simple quote, and you probably heard it, but he says, if you fail to plan, you are planning to fail. This is what I have built my entire career on. I started out with retirement planning when I was a financial advisor and in asset management. Now I help traders build their trade plans. And that's going to be the basis of what we're going to talk about today. And I believe in plans so much, and I have been doing this for a while, and yet to meet a successful trader that is just winging it, right? Just by the seat of their pants. Everybody's got a plan. They have a process, and that's what we're going to talk about today. So, moment of truth, right? Just that real gut check question. How many of you have a written trade plan, right? And when I say a written trade plan, I mean it's written down, a written set of rules. Everything from the system to the trade management rules to the risk management rules written down. Now, we're going to transition this and talk about the difference between trade plan and business plan, but really they are one and the same. So let's think about this for a second. Most of the traders that I've talked to, and I've had thousands of conversations, they don't have a written trade plan. So that's what I try to help them with. Now, what makes an economy work, right? Other than the wonderful people, right? What makes the economy work? Successful businesses, right? We're in a capitalist country. Now, and what do successful businesses have? They have business plans. They have successful business plans. And the business plans that businesses have, they are adjusted over time, right? Markets change, people change, habits change. But the point is they have a written set of rules to help maximize their profits and as well keep them out of trouble. So let's talk about this. Let's talk about the business failure rate. So according to the U.S. Bureau of Labor Statistics, 65% of businesses fail in the first 10 years. 75% fail in the first 15 years. And that's pretty staggering. And I'm sure we have seen some statistics like this. And that just means fail, right? If you translate that into trading terms, right, giving up, running out of capital. So, a business can stay in business for a very long time, losing money until they just become insolvent. So the important thing is to have that plan in place with business plan, the trade plan in place. We're going to talk about them. They're going to be one and the same today to make sure that you're not in the majority. Now, this is also from the Bureau of Labor Statistics and Investopia. I gathered this information, but what are, from what I found in my research, what are the top 3 reasons why new businesses fail? Okay, so there are 3 reasons. Let's talk about it. Poor business planning. And I translated this into the stock market language. And I said, look, a solid business or a solid trade plan is really the foundation of your success. A trade plan should have realistic goals and a roadmap of how to achieve them. I can't tell you how many people, they start a new process or a new system and they just continue to wing it. And they don't have checkpoints along the way. They don't have rules along the way. So it really does not set them up for success. Okay. Another reason why new businesses fail, too little financing, right? They don't have enough money. And I will translate this into the stock market terms, like don't have unrealistic expectations. Okay. So you might have enough in your trading account, but you might not have realistic expectations. Turning a $10,000 account into a $10,000 per month income stream, that's beyond unrealistic expectations. And I've literally, people email things like this and these numbers, and I have to kind of bring them down a notch. And the problem with unrealistic expectations is you want to meet those expectations, so you take above average risk, right? And that's not a good recipe for success. So don't have unrealistic expectations when it comes to your trading. Be realistic with your business plan. Number 3, not investigating the industry, not knowing enough about the industry, your competition. But in the stock market, I'm going to say not knowing enough about yourself. Not know what kind of trading you like, whether it's mean reversion, trend following, swing trading, momentum, right? That's the most important thing when it comes to, picking a successful trade plan versus chasing the holy grail system with big numbers. And that's what a lot of people do. And we're going to talk more about the holy grail system that people chase here in a minute, but you're not going to stick to a business plan or a trade plan if you are trading something that just doesn't match your personality. So in the business world, we say investigate the industry. In the stock market world, I say, look, investigate yourself, right? Know what kind of trader you want to be, and then you can build a custom trade plan that really shapes that and sets you up for success. To be successful, you have to approach trading like a business, not as a hobby. And this is important, and there's a huge difference. If it's approached as a hobby, there's really no commitment to learning and making the adjustments that need to be made. So you have to take your hobby hat off and put your business hat on. And how to get out of hobby mode is to really have some guidelines written down, a written set of rules that you can stick to, and that can help you really maximize profits and income and keep yourself out of trouble when the market's just not acting right. The biggest obstacle I have seen with traders is not the system or not the market. It's that they really don't have an objective rules-based system. And when I say objective, I mean written down, no discretion, right? It tells you when to get in, what to buy, when to get in, when to get out, how much to put in. So you really have 3 pillars of a trade plan, right? So they don't have that written set of rules. And that's what we're going to talk about today. And I'm going to teach you a rules-based business plan today. I want to talk a little bit about psychology before we get into that, because this is incredibly important part of trading. Now, with the thousands of traders that I've talked to over the years, decades, I have found that traders and even long-term investors from my retirement planning days fall into one of 3 stages. And we've all been here, okay? So stage one is really where new traders or investors start, or maybe you're not new, but you're new to a trading system or a new process. So what happens when we have that new factor? Usually we get super excited, right? Numbers look great. Everything looks great. I'm going to conquer the world. So we're overconfident, easily influenced. And have you ever just said to yourself, I just got to buy something, right? I just feel like I got to buy something. We've all done it. I mean, it's happened. So, but the problem is when you're easily excited and overconfident, you don't really have a lot of rules. You're just buying, right? Eventually, you're going to hit that string of losses that knocks you down a peg or two. All of a sudden, it's not so easy, right? So then that moves you on to stage two. Now you're scratching your head a little bit. You're semi-confident because your confidence just took a hit because whatever you were doing, buying without abandonment, is not working, but you're determined. So I've seen, this is probably the most common stage I see most traders in. They go on this quest to say, I have to know everything about everything. I need to know every bar, every system, every style of trading, every stock, just information quest. The problem is that, most traders get stuck here for a couple years, right? Before they realize that that's not the keys to the kingdom. But I've seen traders get stuck here for decades and just cannot find their rhythm because, you do not want to be master of all trades, jack of none, right? And so it's an information overload because you got all this information, but you're not sure how to use it until you just kind of throw up your hands and like, I feel lost, right? And you don't know what to do. You're frustrated, you're stuck. You don't have any confidence in what you're doing because you're just not sure it hasn't working. Maybe you're in a bull market and you broke even, or maybe you're in a bull market and you've underperformed or lost money, whatever the case is. I've actually received emails from people that said, hey, whatever I've been doing in the past, whatever they've been doing in the past, maybe from another service or maybe just trading themselves, lost money and they significantly underperformed. So they say, hey, Steven, can you just give me a double or a triple to get back to break even? Like that's just an easy thing to do. Right. And that's a dangerous place to trade from. We call it revenge trading, right? Because they're just trying to get back to break even because whatever they have been doing hasn't worked. The problem with that is you have to take above average risk to get to that point. And that is not a recipe. That is not good business. That is not a recipe for success. So they're in this stage three until another system or another process or another shiny object comes along. Right. Which is why I talk about the keys to the kingdom. If you really want to turn this into a business, right, you have to have a rules-based trade plan. You have to turn it into a business. So my big promise to you today is I'm going to teach you an objective rules-based trade plan. I'm going to give you the money management rules, when to get in, when to get out. We're going to look at some real life trade examples. I want you to get to know it, to be able to visualize it. And I'm going to teach you this business plan, this trading system, and I'm going to teach you how to trade in only 20 minutes per week. Now, I know that's a big promise, but if you stay with me, get a piece of paper out. I'm going to deliver on it today. Real quick, let's make the lawyers happy and read that disclosure for a second. Okay. Just a little bit about me so you know who is on the other end of the screen. This is me right here, Steven Caweizell. I am a former financial advisor turned trader publisher about a decade ago. I worked in a practice when I was a retirement planner with 60 million assets under management with another advisor. I'm the author of Expert Trading Systems, which you can go to Amazon and purchase. I'm the head founder and trader of thetradersplan.com. And what I am most proud of is I have helped thousands of traders set up a rules-based system. And that's what I'm going to teach you today. So what makes this easy? Everything that I'm about to teach you, this business plan, what makes this easy? Well, for one, there's zero fundamental analysis involved. Okay, no earnings, no CEO change, right? You had the Starbucks CEO change this morning. You don't have to analyze that. It's just price and volume, right? Just objective information, right? There are 3 rules that you can literally write it on a Post-it note. So I challenge you, and I challenge anybody who's watching this, if you're sitting at a desk, if you have a Post-it note handy, get it out, get a pen or a pencil out and write these rules down, because you can literally write these rules down that I'm about to give you, and you can slap it to your computer screen. It's that easy. And it only takes 20 minutes per week. If you are looking for a day trading system, or you're looking to stare at your screen all day, this isn't for you. Right? This is a lifestyle system. I don't need to stare at my screen all day, nor do I want to. It's not going to make my stocks or options go up anymore if you stare at it. As a matter of fact, it sometimes can have the opposite effect, right? I like to place my trades and then go do something else, go fishing, right? Go golfing, go enjoy, spend time with my kids, my wife, go enjoy life. Okay, so let's look at this from, really a bird's eye view. This is a once per week setup. What I'm teaching you, this business plan, is a once per week setup. So when studying the bottom of stocks, I noticed that there are certain qualities that these stocks have before they turn into winning trades. Now, in order to identify this money-making setup, we must recognize the qualities and the rules before they make their big move. Now, I have narrowed down these qualities into a rules-based system that I'm about to teach you. And how do we set this up? It's really easy. Take Sunday morning, I grab a cup of coffee, and I go to the computer and I hit the scan button. I spend 15 minutes going through the weekends, Sunday morning, Monday morning before the market opens to find the best setup. Super easy. Literally, it can take me, about 5 minutes at this point in time. I'm pretty quick, but let's just be conservative. On Monday morning, right when the market opens, I place my market order, right? I'm not going to sit there and get fancy with it. I'm just going to buy at the market open on Monday, 20 minutes total. Set that alarm on your cell phone and do the same thing again next week. Rinse and repeat. It's really just that easy. 20 minutes per week total. And that's at most. Okay. It's really simple. So we're looking at CrowdStrike here. These are the rules. We're going to really get into it. So if you have any distractions, you're going to want to pay attention because I'm giving you some hard rules. Now, this is CrowdStrike, and I like looking at this chart because this is just a classic textbook example of the system that we're going to trade. We're going to look at more examples, but this is really the classic pattern. And these are the rules. These are the 3 rules. I told you could write it on a Post-it note. So we're going to go through these rules one by one. I'm going to explain what they are. I'm going to explain the psychology behind these rules. That way you can really understand what's going on behind the scenes. The more you understand a system, a process, a business plan, the more you're likely to trade it, the more you're likely to stick to it. And that's really, really important. So I try to teach you everything you need to know so you can feel good about it. So let's get started. This is CrowdStrike. Doesn't matter the name of the stock. Let's just look at the chart. And this is a weekly chart. Okay. This is a once per week setup. This is a weekly chart. I want to be clear about that. So don't confuse it with the daily. All right. This is a weekly chart. All the charts we're going to be looking at today are weekly. So let's talk about this. Rule number 1. This is a 4-bar pattern. 1, 2, 3, 4. But we're going to focus on this reversal bar right here. This is really the main event. This is a signal bar, but it's really a 4-bar pattern. So rule number 1, weekly chart must undercut the prior 3 weeks. What do I mean by that? Well, I take a reversal bar at a swing low and I say, okay, the lowest point of this reversal bar has to be lower than any point in the previous 3 weeks. 1, 2, 3, check. What's the logic behind that? And why do I do that? Well, for one, I'm really buying high quality stocks on a pullback. That's what I'm doing, right? This is a pullback system, right? And then you look for the reversal to slingshot the other way. But I'm going to put some rules in place to what kind of high quality stocks we buy and put some hard and fast rules to the plan. So the reason why the weekly chart must undercut the prior 3 weeks is a lot of times people, when they're buying pullbacks, they don't really have any rhyme or reason, right? They're just kind of buying. Well, the problem with that is what happens if you buy on a pullback, but sometimes you can be catching a falling knife, right? So what I'm looking for, and how many times have you bought on a pullback? Let's say you buy right here, you put a stop loss down here. Let's just use that bar, for example. How many times have you bought on a pullback, you place a 10% stop loss only for the following week or the following day, you to get picked off, your stop gets picked off, and then the trade bullishly reverses and goes in the intended direction. It happens. I hope it's happened to you. That means you're using stop losses. It's just the cost of doing business. Well, let me ask this. How many times have you been frustrated after that happens and you say, I hope that thing goes down forever? I think we've all said that to a stock, right? I hope it just continues to go down. what I have found is sometimes the best time to get in a stock is after somebody else has already been picked off or somebody else has already been frustrated, right? Somebody else has been shaken out, right? Because then they don't want anything to do with it. The market can tend to pick you off and then it bullishly reverses. They ignore the stock because they want it to go down forever. And then it goes in the intended direction. So the logic is we're buying high quality stocks on a pullback, but I want to buy after it runs everybody else's stop. All right. And just kind of gives me that pattern. It's a very simple rule. Rule number 2, also simple. They're all simple, but powerful. The weekly chart, the week, we're looking at this signal bar right here, must finish positive, must close above the previous week's close, right? So you got the previous week's close down here. So it must close above the previous week's close. Doesn't have to close above the previous week's high. Doesn't have to close above the previous week's 3 weeks high, excuse me. Just have to close above the previous week's close. Now, what's the logic behind that? Well, I mean, I want there to be enough buying pressure. I want the bulls to be in charge. Like we do all these little things that give us edges, all these little things that make us the house, right? So when I get a reversal bar, I'm looking for there to be enough bulls to make it strong, make it finish above last week's close. So I can have that extra confidence, that extra edge in the trade. Now, let's look at this as a perfect example. This fulfills rule number 1. This is a reversal bar, right? Undercut the previous 3 weeks. You can see right there, but it didn't close above the previous week's close. The bulls weren't in charge and it rolled over and failed. All right. Then you get another reversal bar that closed above the previous week's close. The bulls were in charge. Boom, slingshot it forward. Okay. Just another thing to give us an edge. All right. Now here's rule number 3, and this is important. Must have above average volume. So this is down here is just a volume histogram, just a simple volume histogram. Every charting platform has them. You can add them to the bottom of your charts. I'm just looking for above average volume. And I define that as volume above the 50 period moving average. Now, why do I do that? Okay, so first, let's identify the blue line is the 50 period moving average. Above the line is above average. Below the line is below average. I'm looking for above average. There's no blue line right here. It's because it was a pretty new stock and there weren't 50 periods to average. But you can clearly see that this bar is above all this. This bar is above all this. So why do I do that? Why is volume so important? It builds on rule number 2. I want the bulls to be in charge. When I see volume like this or volume like this, that's the smart money flowing in, the pension, the institutions, the pensions, the hedge funds, the mutual funds. What's going on here is some interesting stuff. Usually one of 2 things are happening. Either one, let's say a handful of mutual funds, they don't want they're going to buy the stock as much as they can below $60, right? Which is good for us because they're supporting the stock. So they see the stock, it goes below 60. They say, I'm buying everything I can. So that creates the reversal. All right. That gives us confidence in the trade. Or number 2, that's even better. What's interesting about mutual funds is it takes the average mutual fund 3 to 6 months to complete their position. They can't buy it all in one day because they would jack up the average price per share, right? They would launch this stock from $60 to $100 because, I mean, they're buying, $500 million, $250 million blocks easily, right? They can't buy that all in one day. So they take a pilot position and initiate. They say, hey, I like CrowdStrike at this price. I think it's a good company, right? I'm going to start buying, but it takes them 3 to 6 months. So when we see that kind of volume, we can just, and we have rule number 1 and rule number 2 in place, we can just hop on their bandwagon and ride their coattail all the way up, all the way until the trade is over. Okay. So let's so they're all 3 important. As retail and traders, you and I, we're not buying this much stock. We're not buying this much stock. I wish I was, but we're not, right? That's really the institutions piling in and they move the market. So when I see that, I can get in and out with these. You can get in and out with these. They cannot. They have to buy over a series of months and they have to sell over a series of months. That gives us a huge advantage. So those are the 3 rules. Let's repeat the 3 rules, right? Rule number 1, got this reversal bar, must undercut the prior 3 weeks. 1, 2, 3, check. Rule number 2, must close above the previous week's close. Check. Rule number 3, above average volume. Check. Buy at the open on the following Monday, voila, and slingshot. Whether it's an income trade for you or you're looking to build wealth through a portfolio, slingshot that thing forward. Let's look at some other trades. That way you can kind of visualize this on the chart. So this is Washington Federal, just a boring bank stock. And I love saying that sometimes because, the scanner of the system, you never know what stocks it's going to put you on. It doesn't have to be the most attractive sounding names like an Amazon or some fancy tech stock, right? It can just be some things you've never heard of. And I'm going to talk about that here in a second. So you have a high quality stock, right? You got the gap up. So we're looking for high quality stocks on a pullback. The uptrend starts, it pulls back, it tries to break down. It doesn't, it reverses. You see the volume, you get in, you make some money. It does it again, tries to break down. It doesn't, it reverses. You make a little bit of money this time. And then it does it again, right? It does it again right here. And it does it again right here. It's funny. The deepest pullback in this whole big move, this whole move from 20 to 35 bucks. I mean, it completed that reversal pattern right at the bottom. Okay. And I'm not saying that's going to happen every time with every stock, but when you start to notice this pattern, it's going to start popping out at the screen. So I challenge anyone, go look at your watch list. Go look at any stock on your watch list, throw on a weekly chart. Remember, we're looking at weekly charts and just look at the last 2 years and see how many you can find. On most charts, you can find 2 or 3 times and you can say, dang, that was a good entry. Here's another one. Royal Dutch Shell. This company's been around forever, just an oil stock, nothing exciting. Although the price of oil from a stock market standpoint has been exciting lately. I don't like it at the pump, but I mean, here's just a great example. This stock was consolidating for most of 2021. And this is a great example where the reversal is not at the absolute bottom. It doesn't have to be. It just has to undercut the prior 3 weeks. But when this stock broke out, the rest of the market was consolidating. So this system, this plan can be a leading indicator of what industries are starting to move. You can see the volume right there. Here's another one that I hadn't heard of before, but high quality stocks on a pullback. You got a breakout right here. It is going higher. It's trying to break down. It starts to, and then boom, reverses higher. You buy at the open, right? It continues to go higher. You got another reversal. Boom. This one you probably lost money on because if you bought at the open on Monday, you're selling somewhere around here. You're just getting out. But you know what? That's okay because then you have the mega reversal. It is a nice reversal on the deepest pullback of this whole move. And that stock was up, I don't know, about 25% just in the first week alone. And it continued to go up. And the funny thing is, I forgot to mark this one. There's one right here too. So you have one, and this one made money too. So you have 1, 2, 3, 4 trades on just a single stock. One of them lost money. 3 of them made money. Okay. Here's one. You remember I talked about Royal Dutch Shell that was kind of breaking out during a correction. Here's one that we actually bought a few weeks ago, and that's not a buyer. We still own it. This is not a buy or sell recommendation. It's a little extended, but you can see right here. This had created a reversal the first week of February and really didn't look back. It pulled back 1 week, but it's a pretty strong stock. Again, this was just a company, a shipping container company that I had never heard of, but the point of a business plan and the point of this process, you don't want to have biases, right? That's why we have rules. Get rid of your biases. So this is one we currently own. We still own. That doesn't mean go out and buy it, but it's interesting when you're even during challenging times, how often you'll really see these stocks break out and start to break out, even if the market's correcting. You will have opportunities. This pattern is abundant. So those were the rules. I mean, we looked at a lot of them, but looked at a lot of charts, but I wanted to give you enough clarity so you could visualize it. And again, I challenge you, you want to see if this works, pull up any stock on your watch list and just go check it out. Go check out a few of them and see if you can identify them. Now that was the actual system, the pattern rules. So now we have the money management rules, like when to get in, when to get out. And this is incredibly important because we talked about there's several pillars to a trade plan. But I mean, this is all we do. Simple, but powerful, and it works. We enter at the open on Monday. All right. I'm not placing limit orders or anything like that. I'm not trying to get fancy. As long as it looks all right, and as long as it's not getting slaughtered pre-market, I'm buying. Okay. I'm selling half at 8%. So that's my target one. I'm selling half at 8%. And once I sell half at 8%, target one is hit, then I'm going to raise my stop to break even on the remaining shares and let the rest run until it breaks the 50-day moving average. Stop loss is at 10% max. So let's just use some simple math. Let's say Apple is $100. I get in at Apple at $100. I'm selling half at 108. When that happens, I'm raising my stop on my remaining shares to 100, which is my break even. And I'm going to let the rest run if it wants to. All right. So that way we're taking some off the top, because the reality is most trades we make aren't monsters, right? They don't go to the moon, but some trades, a lot of trades can be really good trades. So we want to allow that profit maximization if we get that trend in that stock that really wants to continue to go, like the Matson stock we looked at just a minute ago. That's really starting to run. It's starting to pick up steam. It's looking pretty good. Okay. Stop loss max 10%. So if the trade just goes against you immediately, you're getting out of the whole thing at 10%. So stop loss at 90. I'm not going to let it roll over. You just, you take your loss and you move on. It happens. So can you do this? Right? I know you can do this. I should ask, can you see yourself doing this? I know you're capable. And honestly, my biggest transformation as a trade coach is really just making this strategy simple enough so that the average trader or even beginner trader could actually replicate the steps week in, week out. I know it's simple, but it works. And my students and family members that repeat these steps are all going to retire significantly better than they were before. And I want that for you. So I understand that everybody wants to hit home runs. I get it. But if you can't keep your eye on the ball, nothing is going out of the park. And it's really just that simple. So if you can commit the 20 minutes per week, you can probably completely change your retirement trajectory, and you will literally make the lives of your family more comfortable as well. So, but you have to commit that time, right? 20 minutes per week. That's not a big ask to really incorporate your business plan and move forward with it. The great thing about this is you can use this as a market timing system as well for the major indices. This is the bottom in 2020. This is the March 2020, the S&P 500. Look at that. It's kind of funny how at the absolute bottom of a pretty nasty bear market, we got a reversal in the S&P 500. Launched it forward. It was a pretty big move after that. Here's the 2018 bear market. There wasn't a reversal in the S&P 500, but there was in the QQQ. Look at that. Right at the absolute bottom. There's that pattern again. Huge 2019 until March or February, mid-February of 2020. Now, we had a long bear market in 2000 to 2002, all right, tech bubble, 2.5 years. Now, right here at the absolute bottom, NASDAQ was down over 75%. Absolute bottom, look at what happened. Again, this is a weekly chart. It took off, and then it started to fall, right? So maybe you got stopped out around here, but look, right before it went on a mega run, look, you got another reversal right here. Now, there wasn't one in 2009, but we had other rules to get us in. So over the last 20 years, this pattern has timed the bottom pretty perfectly in all bear markets so far. It's looked pretty good. So you can not only use this on, your business plan for your individual stocks and your individual trades or options, you can use them on the major indices as well. So this is what the system has done over the last 5 years. And this is going back to the beginning of 2017. So we've identified 562 high quality trades, right, over the last 5 years. So, and that just goes to show you the 562 trades, this pattern is abundant, right? There is enough of them out there. You're not going to be short on finding these trades. It has a 71.5% win ratio over the last 5 years. And so if you think about it, and that's with two bear markets, right? We had a bear market in 2018, we had a bear market in 2020. So it's had some challenging times as well, and it's still held up, or the market has. Average trade length is about 43 days, right? So what if you buy two per week with an average earnings of 2.38% per trade? Because that is the net gain per trade, right? 2.38% per trade. Don't know if it's going to do that the next 5 years, right? There is just no guarantee. But that's what it's done the last 5 years. So if you were to put 10,000 per trade, assuming you can do that, right? Let's just say with that $100,000 mock portfolio, then you could earn about $476 per week. That's over a reasonable number of trades. That's over a reasonable time period. Now, full disclosure, I don't know if you can put 10,000 per trade. Maybe you can put 5,000 or 1,000. It just doesn't matter, right? The system works and historically has done some pretty good numbers over time, right? But again, you don't have to reach this level if you can't just yet. That's completely okay. So, you know what the interesting thing about it is, you might first question, well, Steve, how has it done this year? We've just hit 5 straight weeks of winners. All right, 5 straight weeks of winners with the match and trade. So we have held up very, very well in this bear market. It's done well. Again, who knows what the market's going to do, but over the next year. But I mean, this is really that nice bottoming pattern that can help you slingshot it forward. A lot of people ask, do I trade options? And the answer is absolutely, right? We trade stocks and we trade options. So some people just take the stock alerts and trade the options. Some people trade the stocks only. Some people trade both. That's okay. So with the options, we're going to book profits a little bit quicker due to time decay, right? We can't let a stock, if a stock wants to run for 6 months, that's great. That means I'm making money, but the option is going to, decay and eventually lose money if it gets close to expiration. So we just have some simple directional option system that we can teach you. That's like, hey, we're going to enter at the option approximately the same time we do the stock, right? And we're going to let the rest run, but we're going to book profits on the options much quicker, right? Due to that decay, and we'll let the stock run, and we'll give the option a little bit more time to run. But you can 100% trade both options and stocks with this system. So, I'm really passionate about rules-based systems and turning it into a business plan, because they take the emotions out of trading. Okay. Rules-based systems, they're designed to give you more freedom. All right. Because you don't have to stare at your screen all day. The smart money uses them because they work. Approximately 75% of all money moved around the New York Stock Exchange is just automated trading systems. Okay. And they use that because they're taking the human error element out of the equation. Keep drawdowns limited. And I believe it is so important wherever you're at in your life to protect on the downside what you've worked so hard for your entire life to build. So in times of uncertainty, we have to make sure we keep those drawdowns limited. That's incredibly important, especially because a lot of the people I work with are approaching or of retirement age. Allow trading to be a real money-making business, not a hobby. We already addressed that, but that's just incredibly important. Trading is a business. If you're going to be successful at it, you're going to put a process in place. You have to treat it as such. And that starts with having an objective rules-based plan. Okay. So here's a couple testimonials just from a couple traders. And I'm going to talk about this for a second. Scott said, he sold half at 8% and been rolling the remaining ever since. Currently up 198% on the closed position, 220% on the open. He let the options run. Okay. But I like this alert a little better, and I'll tell you why. Richard said he dropped $20,000 on a weekly reversal for Sportsman Warehouse, about 44%. So it all crazy for gain in 2 days. Love the reversal strategy. Win ratio of 91.1% on all my trades to date since I started 3 months ago, 40 trades or so. So he really took it and run with it. And I've had a lot of conversations, even kind of emailing back and forth. And you can just kind of hear the transition that he was making from, going from, discretionary trading, just whatever he felt like in the moment, to really, really putting some rules in place. And that's why I love it. So, I've been here, 4 or 5 times, and I really like this group so much. And it's because, honestly, Matt Hedge has produced some of the best students I've had the pleasure to work with so far, and it's been a great experience. So, right now you might be wondering if this is really going to change your life and improve your retirement that much, enough to make it worth it. All right. So remember, I built retirement plans professionally. I know the fears and desires that come with retirement because I heard it every day. And I still do. I built this so you can grow your nest egg or your income. Really, no matter how big it is, it doesn't matter the size. It doesn't, right? You just have to get started, and we'll grow it together, and it's going to make life easier for you and your family. So my twin brother and I, we run this company, and we answer every email, and we guarantee that we do. So if you're ready, we're ready. And I'm going to tell you what it looks like, to come and work with me, and what that really looks like. And you can make the decision if that's right for you. So right now I'm offering, looking for a handful of students to join my weekly income system program. In this program is we have more advanced courses, more advanced training that you can really help complete your trading plan. There's only so much I can put in a 50-minute presentation. Now you can take what I've taught you so far, you can go find the patterns and run with it. I know you'll do well with it. If you really want to maximize that, put a value on your time, you want to get there quicker, then you can come join my weekly income system. While I'm teaching you how to trade this system week in and week out, all right, I think it's very important that I send you the alerts as well. That way you can get the same, when you're going through the process, you're going through the motion, you get the same trade that I did. And that's incredibly important for me and my students, because I don't want you to be dependent on me, right? And why I say that is because if something were to happen to me, for God forbid, you're still okay. Right now, I have people that have been with me a very, very long time, but I think it's important that I do my best to help you put that business plan in place so you can be independent. You can be an independent trader and you can do this yourself. So every week before the market opens on Monday, we're going to deliver at least a weekly income alert prior to the market open every Monday with very specific targets and stop losses. And, there are times like if I wake up and the market's getting hit really, really hard, I might hold off for a day. All right. And I've navigated this recent bear market very, very well. We've hit 5 straight winners, and I alerted one this Monday as well. So we've done pretty well this bear market. But, if the market's getting hit, I might either alert 2 if it's looking like a good market, or I might alert none. But on average, you're going to get 1 per week. Okay. Now, again, I don't know where your portfolio is, and I don't think it matters, but this is just kind of show you what's possible if you were to take every trade and stick to the system to a T over a reasonable time frame, right? You put $10,000 in per trade, and let's just say you trade 1 per week. It's $238 per week, okay? Because it averages 2.38% per trade over time. Now, I have the options here in yellow. Right? We have an option service. It's averaged about 4% per month since we launched it last year, actually a little bit more than 4% per month. That's a long short strategy. It's actually done pretty well too. So you can trade the stocks plus the options, and that's what's possible. Or you can buy 2 stocks per week plus the options, and then that's what's possible. So again, we don't know where the market's going, and I don't know how your portfolio is. So there's obviously no way to project this. I can only see what it's done over a lot of trades. So it doesn't matter. You don't have to trade $10,000 per trade. You can trade much smaller. The point is to really make sure you have a reasonable business plan in place so you can execute that and start earning. Now, the weekly income system, I love it. That is, my number one strategy. I launched a service last year called the Fang Momentum, and I really love it, and it's great. It also is a simple once per week setup system, right? But it's really focused on strong growth stocks and momentum. So it's done really well. Now, this is a back test, to be clear. I've been trading this for a year now. I have my own money in the system. I absolutely love it. But when I tested it, said, okay, on average, you're also taking about 1 trade per week. If you'd have taken every trade in this system going back to 2012, right, your $100,000, if you start with that portfolio, would be $1,485,000 versus buy and hold the SPY, dividends reinvested, the S&P 500 ETF, $450,000. So you have $1 million more. So, and that's over a long time period, over a lot of trades. All right. But honestly, so 330% more versus just kind of buying and holding those long-term ETFs. All right. This is an active system. Now, what I'm also proud of is in March of 2020, this is kind of how I test systems. It was only down 3.5% for the month, when the SPY was down 12.5% for the calendar month. So you can see, I believe in drawdowns because they're incredibly important to protect what we've earned. And so I've built in, these rules in place to say, hey, this is when it is safe to trade or to not trade, all right, to make sure that we are protecting our capital. This is what it's done every single month since we've started. All right, this is kind of the heat map, so to speak. This is what it's done every single year since 2012. We did have 2 negative years, one in 2016, and one in 2018. But still, I mean, we had a monster couple years last year, and it's actually around little bit above break even this year, which is incredibly good considering the S&P 500 and the NASDAQ are down around 15+%. So when you have a portfolio, this is a portfolio style system that's slightly above break even. I mean, you're beating the market significantly by about 15% so far this year. So it's done pretty well. All right. And, this is a 100% rules-based system. I don't know what trades it's going to tell me to take. I don't. So, but in the fourth quarter, Tesla was a monster, right? And that's just kind of what you have. You're buying momentum. So Fang told me to buy Tesla right here. And honestly, I didn't want to buy it, right? But there's a lot of times I say it to myself, but I buy it anyways because that's part of my business plan. And I had no idea that within a couple of days it was going to, go straight up. So the rules told me to rebalance. So I booked partial profits around 52%, and then I sold the remaining right there. Right. So gave some of it back, but I mean, that's momentum. And the reason why it is really done well this year is because we've had some energy trades in there that have done really well. And we all know what those have done. So it's just pure momentum style, buy the strongest. So here's kind of a recap so far: the weekly income system plus alerts and the Fang Momentum system. So you have two different styles of trading, both 100% rules based. So you can incorporate them as part of your business plan, plus alerts as well on this. In addition, every Tuesday morning, I really give you my watch list, right? Kind of like my top 5 of the week. So every Tuesday morning, I send out a swing trade setups blueprint video. And a lot of my subscribers love this because, I narrow down what I really like and what's looking to set up. These are more discretionary ideas, but they're also more aggressive. So, I sent out Riot before it broke out, and you can see I actually took a snapshot of the email that Riot was a beautiful cup with handle with a potential buy point above 4. That's a snapshot in an email I sent. Did I have any idea it was going from 4 to 76? No, I didn't. Right. You just kind of follow the rules and, then the trades will be what they're going to be. Right. So we're looking for a little bit more aggressive ideas in this top 5. This was another one as well. TCAT, we bought it as a bounce off support. It was up quite a bit, I think around 50% in 4 days. Obviously, that's probably not typical, right? But we're going after these aggressive style names. For the first 20 members, anybody who does want to join me, if options are important to you, I did launch my option income service last year. It's averaged about a little over 4% per month since we've started. It is a long short strategy. It's also done really, really well. We've made some very, very good money this year so far off shorting Rivian. But we'll do everything from straight calls, straight puts to debit and credit spreads. But I'm offering this if anybody wants to join me today for the first 20 members. So far you got 2 systems, right? Plus alerts. You got my swing trade setups blueprint plus the option income alerts. All right. So you really have 3 processes, 3 systems that you can choose from and incorporate in your business plan. In addition, I'm going to send you the scan codes. I have scan codes for stock charts and Thinkorswim. It's incredibly important that you just make it easy, right? The easy button, right? I'm going to click this button and it's going to give me, 10 reversal patterns for the previous week. And then we narrow down the list from there. So if you don't have one of these platforms, you can easily take the scan codes that I give you and just build it on your own platform. I have people that do that, but I give custom scan codes just to make it so easy and so simple. I really worked hard on creating these scan codes for you just to make that time shorter, right? Because we don't want to look at 100 charts to buy one thing. And just to show you, this is a snapshot of stock charts. The opportunities are abundant. Right. This isn't something where you maybe get one per week, maybe don't. Like just the opportunities. There's a lot of them, right? There was 36 this week. Last week, there was 7. A couple weeks before that, there was 50. So there's a lot to choose from. As a bonus, I want to throw in my fast track weekly income workshop. Now, I launched this a couple of years ago, and the idea of this, I've had fabulous feedback on this. So the idea of this is so I can give you more hands-on. Right. I keep it a small class. Right. And the goal is to get you from newbie to mastery in this weekly income system in less than 30 days. So I do a live setting. I teach. I sit there and answer questions till I'm blue in the face. Right. My next live workshop is going to be the 2nd week in April. I don't have a specific date. I just had one last week, but I keep these small for a reason. So I can help you as much as I can. Now, I added something, unlimited attendance for life as long as you're a member. So that means if you can't make this one and you're a member and you want to make one, you know, in the following month, I usually do approximately one every 5 to 6 weeks. So approximately one per month. You can attend another one, or you can catch as many as you like. Right. But I think it's important that you have that extra touch. So we have really an amazing offer and quite a bit of stuff to really help get you there. And I think the extra support and the extra workshops is really, really important, because I want to make sure that you're comfortable asking me questions so I can help you in any way that I can. Right. So if all this did was really just add an additional maybe $300 or $500 per week in retirement income, would that be worth it? Maybe it's not that much. Maybe it's less. That's okay. What if it just financed a few trips on your bucket list each year? Right. I like to travel. What if it allows you to retire more comfortably than you and your family thought was possible? Would that be worth it? Right. So the complete weekly income system, actually, absolutely everything we talked about is $997. So $997, you really get 2 systems plus the alerts, plus the swing trade blueprints, scan codes, workshops. You saw the list. It's a big list. I want to do everything I can to really get you over that hump. So you can go to thetradersplan.com/hedge right there, thetradersplan.com/hedge. It is a secure order form. I have about 5 minutes left, and if I can't get all questions, my contact information is on the order form. You can get my personal email and a phone number to reach me if you have any questions. I'm available. I'm happy to answer it for you and see if this is for you. You know, I've been doing this a while. Like I said, I've really received some of my best students from Mad Hedge, and I understand right now we're in a time of uncertainty. So I understand that's an objection. Well, what's going to happen in the next, 3 months, 12 months? I don't know. Right. I know we've done really well the last 6 weeks, but I want to offer a buy 1 year, get 1 year free. So normally it's $997 for 12 months. I want to make sure that you feel comfortable and have plenty of time to really master the system. Now, you're going to do it in 30 days. But comfortable and confident system that you have 24 months to work with me. So buy 1 year, get 1 year free. You can go to thetradersplan.com/hedge. Okay. So it's a BOGO. So here's my guarantee. Trade it for 30 days. And if it's not for you, just send me an email. Request a full refund. But you got to send me a snapshot. You got to take in at least one trade. Right. And if it's not for you, that's okay. Right. I respect that. But it has to be within 30 days, and you have to send me at least one trade that you've taken. But I understand most people don't want their money back. They want to break out. Like, they want a business plan. They want to be successful. So here's my 2-part. You haven't made $3,000 or tripled your subscription income. So your $997 investment, subscription investment in 90 days. I'm going to personally work with you one-on-one until you do. Just send me an email. I'll look at your trade log. We'll share screens. I'll see what you're doing wrong, because I want to get you over that hump. So that's my personal guarantee to you. So again, everything we're talking about is weekly income system plus alerts. This is a buy 1 year, get 1 year free. Fang Momentum system plus alerts. So you have 2 100% rules-based systems, no discretion. The weekly swing trade setups blueprint, the option income alerts. That's a long short strategy. The fast track workshop, which I'll do another one in April, and custom scan codes. Okay. So absolutely everything. Again, my contact information is on the order form. If I cannot get your question today, I'm going to try to look at some questions real quick to see if I can get them answered. The link is in the chat box, excuse me. So, okay, I have a question. Do you use fixed stop losses, orders, or conditionals so you don't get? I use fixed stop losses. Okay. If my stock's down 10%, I don't want to give it more room. Just get out of the way, right? The system has a 71 historical percent win ratio. I don't mind the other 29% taking me out, right? It's the cost of doing business. How do we define or filter high quality stocks? My scan code does that for you. I have certain parameters, right? But really, you're looking for high quality trends that are pulling back. Thank you. Okay. So any other questions? Do we have any other questions? I'm seeing some orders come through. I'm really, really looking forward to working with you guys. Do we have any other questions? Again, if I'm got about 2 minutes left, I can always hop on the phone with you. You can contact me on the order form. Does a current member get extended? I'm not sure what you mean by that. Ray, are you a current member? How much capital does it require to get started? I mean, I think the most important thing is that you just get started, right? $1,000, $2,000, invest in your education. I think that's incredibly important. Ray, email me, and so I can look at your current plan. Okay. But if you want to add to your current plan and you want to get the buy one, you get 1 year free. Yes, you want to go ahead and order. Is this strategy included in your book? No, it's not. Can the entry be on any other day of the week as long as we use the weekly chart? No, I don't recommend it because now you're adding discretion. Let's keep it rules-based. All right, just buy at the open on Monday. Don't try to overcomplicate it. Anything else? Probably one more question, and then I'm going to pass it back on. Does it work on daily charts? Yes, it does. You will get, I have daily scan codes, and I'm about to roll out short scan codes so you can short this as well. But if you do it on the daily chart, you're going to have a lot of trading, right? You're going to have a lot of processes, trades. So I caution you on doing the daily. You can do the daily and it works, but you're going to have a lot to choose from. Yes, you can short trades. Okay, I think that's it. I'm looking forward to working with the people that have enrolled. If you have any questions, my contact information is on the order form. You go to tradersplane.com/hedge, and I'll pass it back on to you.